Welcome to the August 13th, 2021 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week, this video replaces the written commentary portion of our report. Hopefully offers a nice change of pace, as well as some insight as to how we set up our charts, what time frames and indicators we use. And on the left side here on the daily chart, we have a 5, 10, 20 all EMAs, and a 50 and 200 SMA, along with a relative strength line and volume. On the right hand side, we have the 10 and 40 week moving averages. Those are SMAs, and a 10-week moving average of volume. And that's pretty much all we use. Price, volume, and then a few moving averages. First up, we're going to run through a few broad market averages. Then we'll take a look at open positions in the model portfolio, and finally we'll see what's out there in terms of new setups. So up first is the NASDAQ composite, which for the most part has been in chop mode since July 7th. So we had that big rally off the lows, stalled on July 7th, pulled back, tried to push through on the 14th, failed and went lower, but turned right back up again. So since that day, the NASDAQ's gone higher, but it's failed to fall through. And it's pulled back a few times and undercut 20, but failed to sell off. So just a real big chop fest here. I think some of the good news is that if we go to the weekly chart to the right, the first consolidation earlier in the year was around 13% wide. The second was around 9 to 10. And this third is about 5%. The pullbacks are tightening up from left to right, which is a bullish sign overall. I think that bodes well for the NASDAQ composite once it enters a seasonably more favorable time of the year. And as generally speaking, these later summer months are tough to trade. If the price does pull back in, we'd look for support to come in around this rising 10-week moving average on the weekly. On the S&P 500, there isn't much to say, just a strong trend up. We do have this top trend line here, which could provide resistance within the next day or two. But even then, we'd just expect some sideways price action. Just a strong uptrend right now. IWP, which is what we use to monitor how growth stocks are acting. Like the NASDAQ composite, stalled around July 7th after a decent rally. And since that day, it's failed to make much progress. Maybe up 0.2%. And the RS line, which had turned up, has reversed lower. But like the NASDAQ, does have price action tightening up from left to right on the chart with a 16% pullback, a 10% pullback, and about a 5 or 6%. So IWP is in pretty good shape. In terms of where money is flowing, it's definitely into cyclicals in the S&P 500. Here are a few charts showing that. Select Materials ETF, regained the 50 MAs, pushing higher. The SLX steel broke its downtrend line, pushing higher. There's XLF, the financials, a Gap and Go pushing higher. And home construction, undercut of a prior low, and then reclaim the 50, and then back to the swing high and pushing higher. So solid price action there too. So plenty of money flowing into cyclicals. And as long as the NASDAQ stays in chop mode, we'll continue to see money flow into cyclicals, and those charts should shine. As for open positions in the model portfolio, we have two. We have AA, which was a breakout above range highs on a pickup in volume, which we added to on Thursday, and URI, which is a big volume breakout above prior highs. And these stocks are, nowhere near as exciting as the growth stocks that we like to trade, the ones that have explosive potential, stocks that can move 20, 30, 40, 50% in 2 to 4 weeks. AA and URI are not those kind of stocks, but while we wait for growth to come around, these stocks can certainly push up 10, 15, 20% higher over the next few weeks. As for potential setups during the next few days, Tesla moved out on a pickup in volume from a tight range. Could be in play for another swing up. NTLA, if it can hold above Thursday's close and then push through Thursday's high, could be in play. And that's after a big volume gap up. Finding support at the 20-day moving average. SKX possibly in play over this downtrend line. Skin is interesting. Big volume gap up, possibly in play over the 2-day high. Looking for a stop beneath the prior day's low. SWCH, also interesting gap up. If it undercuts the low of the gap up day and turns around, it can break this downtrend line, could be in play. SQ failed to follow through on a recent breakout attempt. Though it did undercut the 10-day EMA, didn't bounce, but if it can get back through that moving average and take out Thursday's high, it could be in play. X could be in play, especially if it holds up for another day and allows the 10 EMA to catch up. SCHN, nothing to do right here, really. Next buy point is at the highs of the base. CCRN, potentially over this downtrend line. VMC is interesting. Large cup with price action moving up on pickup in volume the last 3 to 4 sessions. All right, well, that's a wrap for tonight's video. Thank you for joining me. We'll see you again next week. Have a great weekend.